Real estate investing can bring big reward and big risks. So know your risks. Welcome to the Real Estate Risk Report, the show for real-world insight on real estate investment risk. Now, here's your host, Lance Pederson.
Thank you for joining us. I am your host, Lance Pederson. This is the Real Estate Risk Report. So today I have with me, he's Daniel Holmlund. He is with Aalon Capital. He's also the head and started and founder of a sizable real estate investment club for his coworkers out at Intel. So, which we'll get into a little bit more here. How you doing today, Daniel?
I'm doing really well, Lance.
Yeah, thanks for joining us. Appreciate the time. We also are both in lovely Portland, Oregon, so we have that going for us. And we also have, for those of you watching the video, I think we share the same brand of mic, so you'll have high quality sound here today. Why don't you tell us a little bit about how you got into real estate? I'm super interested in learning more about how you decided to start an investment club. How that kind of came about, but I'm assuming it's all born from a passion for real estate investing.
Yeah, absolutely. How far back do you want me to start?
Yeah, I think just start back. Like, what got you into why real estate? I mean, obviously you're in the tech business and work for one of the largest, if not the largest, chip manufacturer in the world. But you're still kind of in real estate. So what? Busy guy. So what? What is it about real estate?
So there's a lot of things about real estate that kind of usually when a person goes into real estate, there's a lot of prep work that goes into just their feelings and backgrounds to why they want to move into something which, it's investing. It's potentially labor intensive investing if you're an active person. But there's the mindset of, I've got a W-2 job. I like my job. I have no intention of retiring from my job. Intel is a great employer. And, I also really enjoy real estate, though, and I like to share that passion with people. One of my biggest drivers, at least more recently, for getting into real estate is that the stock market has been up and down quite a bit. Mm-hmm. There are wild swings in the stock market. And if I want to retire, I like to know that my retirement is based on something which is actually fairly illiquid and is not moving around so much. Yeah. So with the stock market, you can buy and sell into it, but so can, consumer sentiment can go up and down. And in real estate, it's a slower moving market. And you can create 5-year cash flow projections on a property and have a reasonable chance that your business plan will execute. So that just from a practical standpoint, that's one of the reasons. Yep. Kind of going back into my childhood, I had some really strong influences in my family. My grandparents actually were probably the initial seed to getting into real estate. So my grandpa worked for International Harvester. He was a tractor equipment repair guy there. International Harvester makes farming equipment. Oh, yeah. And he worked there his entire life until 65. Yeah. And then he retired from the company. And at that point, my grandma, who was the real financial genius of the couple, said, "Hey, let's go and buy an apartment complex and we'll fix it up in our retirement. And that's what we'll live off of." And so they partnered with their brother, my great uncle, and they bought 120 units in Aurora, Illinois, which is a pretty sizable investment. Mm-hmm. And they spent the next couple of years fixing up those units and running the business. And when they passed away, I was about 10. My parents suddenly, inherited an apartment complex. Mm-hmm. And the problem was that we couldn't pay the inheritance tax on it. It was a valuable asset and we had to pay inheritance tax on it. And we didn't have the money to do so. And so it created this huge problem inside our house. And I as a 10-year-old, was just kind of listening to all this. Yeah. And later on, it struck me, probably when I was in college, that my grandfather the reason my parents had a problem was because my grandfather and grandmother left us something. Yeah. And it wasn't his job that got him to the point where he could do that. Yeah. It was after he retired and bought real estate. Yeah. So that's kind of the beginnings of why I started getting involved in real estate.
Yeah, exactly. It's funny how those things work, right? Like I've been a business owner, my whole adult life. Of course, when I was a child, I said I never would be, but my parents were, right? And so it's like, it's what you see. It's like you said, it's a 10-year-old self who's going, note to self. That's interesting, right? Which then, as your prefrontal cortex develops and things start to make more sense, you're like, I see, what was really behind that. And there it is, real estate. So for you, how about the club? What happened? Like, did you bump into other guys who are like, man, I'm kind of into real estate, and then you guys are like, you know what, we need jackets, we need a club, like, let's do this thing. How does that go down?
It's a lot of work, and the way it went down was I realized that in order to participate in multifamily investments as an active investor, I needed to build a network, and so I literally went out and set out to do that. So my goal with the real estate club there is to bring, great education into the people that are there. And we don't talk just about multifamily. We talk about all sorts of real estate. Mm-hmm. We bring in guest speakers and we have discussion groups, and it's a good time. We've got about 650 members. My 2021 goal is to double that. And so basically what I did is I looked at the clubs that were already existing. Intel is a great place to work, and they really put a lot of emphasis on employee happiness. And so they have a whole series of clubs that they run through employee resource organizations. Mm. And so you can go and talk to your employee resource organizations and say, hey, I want to set up a club. And at Intel, there was a stock investment club. There was a startup investment club, usually high-tech startup investments. Mm-hmm. But there was no real estate club. So I went there and said, I want to run this. Mm. And honestly, a lot of people have different experiences in setting up REI clubs inside their business. Some businesses are hostile to it. Some businesses are not. Some, all of them, you need to keep a strict separation between your job and your club. The two do not, speak for one another. They do not sponsor one another. And you need to make sure that all your HR guidelines are strictly followed. Mm-hmm. But basically, one of the HR guidelines is that I'm not allowed to advertise the club internally in Intel, which makes it very hard. It's all word of mouth and then connecting with the right network of people to pass that word of mouth along. Mm-hmm. So now we bring in great educators, and I've the satisfaction of getting emails from people that say, hey, I went out and decided to buy a rental house because of your club. Yeah, it's cool. It's really amazing. I've got several of those. So they're just
span campuses, I'm assuming. I mean, it's sort of
it's all virtual. At Intel, almost all the meetings are virtual. Even before the pandemic, they were virtual. Yeah, because teams are so spread out geographically. Yeah, and so we just did it that way and continued going.
That's awesome. And then for you then to start, we look at this progression. So like Aalon Capital, so actually forming sort of your own, hanging your shingle, so to speak. What led to that? It was just more of a, hey, you're out there doing business, looking at deals, getting involved. You need sort of, you need an entity to do that, or, what's sort of what's your vision for that piece of it?
It's funny you asked that. I'm currently in the process of changing the name.
Okay.
Aalon Capital, for me, it was, first of all, hey, a business that starts with 2 A's is always going to be at the top of a list, right?
Yep. And so phone book, man, you're going to pick up right away, right? In that
I was at the top of the yellow pages, if the yellow pages were printed anymore.
They hung around longer than all of us would liked, they finally stopped showing up at our door. So
my original thought with that was actually my wife and I, we actually volunteered in France for a while. We were working with Algerian immigrants, and Aalon in French means let's go. And so the idea of real estate is that real estate is a team sport, and let's go together. Yeah. And so that was the original idea. But it's not an idea that really connects with people. And I've actually been thinking a lot about my core values in this business. And this business is about helping other people. It's about helping the tenants that are in your properties. It's about helping your investors. And it's about helping the other people that are on your GP team. Mm-hmm. So I'm changing my name to Good Samaritan Capital. Nice. And that's what we're going to be going forward. And, this is our our podcast and education network, the Real Estate Investing for Professionals, REI4professionals.com. And so those are going to be our brands going forward. But the reason why you want to start a business is the reason, why any small business needs an entity, right?
Yep.
If you want to partner with people, you want to make sure that you've got limited liability. There's definite tax advantages in being able to, I just flew out to Des Moines to look at a property for due diligence. Mm-hmm. And those sorts of things are deductible through your LLC. Yep. So, it's really about creating a brand and also enjoying the tax advantages of having a business.
Yeah. So let's kind of pivot into that. So I think you've closed obviously some deals, some multifamily deals, and let's dig in sort of your on-site due diligence on like the Des Moines property as an example. So maybe lead us through the genesis of that deal. How that came about, where you got to the point where it's worth sort of jumping on a plane and braving the pandemic to take a look at an asset. So kind of life of a deal. How did that come about?
Okay. Well, currently we've got about 850 units under management. So we're GP on 850. We're always looking to acquire in the Midwest and Southeast. And in this particular case, one of my partners called me up. She is actually my co-host on the Real Estate Investing for Professionals radio show. Very good. Podcast. Yeah. So her name's Carmen Detloff. And so she called me up and said, hey, I've been looking at this property over here. I think it's got a lot of potential. It's 330 units. It's a big property. And it's in a C neighborhood, could be raised up to about a C plus area. It's right next to an Army base. It's got different jobs and economy around. It's in Des Moines, Iowa. Mm-hmm. And so let's go over there and we're going to meet we went over there and we met the renovation crew. We met the property managers that were looking at managing the deal. And we walked the units with the inspection crew. Or we personally walked about 20% of them. The inspection crew walked 100% of them.
Yeah, wow.
And it took about 3 days to go through the property. And I'm saying a lot. I need to stop that. But we went over the budget and started to create a plan for what could be done to this community.
Right.
To bring up the value, to potentially improve the tenant base, to potentially raise the rent some. And of course, we had to do our area analysis to make sure that was something that could feasibly happen.
Right.
So yeah, that's what we did.
Yeah. So I mean, it's, translation, right? So you guys are like, hey, it looks like there might be a there. And based on the T12 and these things, it's sort of like, it looks like, you squint, there might be a deal here. But as you guys said, ultimately it comes down to, you got to go all the way down into, we need to develop a viable business plan for this asset, which means viability, of all of everything, right? Like you said, like, okay, it's easy to talk about, C neighborhoods, C whatever, but you go there, it's a different experience.
Oh, and,
right?
And
you're there. You're in the element, right?
You get details that you would never get if you're not there. Of course, we went and looked. This property had a tennis court and a basketball court that were in disrepair, and a playground that looked like it was from the 70s, all rusted out. And so you get the opinion of the inspection crew and the current property management there. So, for instance, we know that we're probably not going to renovate the basketball court. And we've got options with the tennis court. We might bring it in. We might just bark it over. So, coming down to really brass tacks like that and making decisions about, we've got this much in our budget to spend on renovating the playground. And we have this much to spend on storage units, which are on the property, and so getting down and really understanding all of those little points and moving money around in the budget in order to come up with a good budget that we can present to investors is the game.
Yeah. So you talk about it being a team sport. So maybe with you is a great example. I mean, just to pan out for 1 second before I have you jump into that, right? Is that this is what we're seeing a lot more of, right? Is that because 5 years ago, 7 years ago, 10 years ago, no one would refer to real estate investing like this as a team sport. It never came up. Mm-hmm. So this is a shift. It's a shift of people realizing that it is a team sport. Right. It's people realizing that scouting deals, finding stuff that's worth even, running through high level diligence, putting it into a pro forma, obviously, assessing the areas and the markets, and then you have to have an asset management team and, those who can, execute the business plan, especially if it's value add. I mean, if your core, it's a core asset and it's just sort of already there, then of course it doesn't require maybe as many, people on the team. Communications experts, right? Especially in value add, people who can make sure you don't lose the community going in, the communications plan, right? And then of course you have the notion of the capitalization side, right? Which is where I spend most of my time, on. It's you got to secure debt, debt on the right terms, and you need to ultimately raise the equity needed, right? And bring all that together. And then post-investment, making sure that you're reporting and all those things. So there's a ton of moving parts, right? But the thing with real estate is that it is a local business. It's local, it's fragmented. The fragmentation is a feature. It's inefficient. That's how you're able to generate outsized returns oftentimes, risk and on a risk-adjusted basis. So, but it used to be that everyone and the big firms sort of controlled this because they'd been along and they had all these resources, and so they had it. But of late, you're realizing that the big advantage is the boots on the ground. It's the acquisitions people. It's the people who have their ear to the ground, relationships with the brokers, with the owners, those things. It really is the differentiator, right? And for those who try to do this armchair from a distance, and you're never in the deal flow because it's fundamentally it's predicated on relationships. And so, with that being said, is sort of that, like when we talk about it being a team sport, once again, acknowledging this is a fairly new thing that people, and I'm hearing it more and more, people referring it to as team sport, never happened. So for you guys in your team, I always loved A-team as a kid, right? Like, you had the explosives expert and the master of disguise, and you had the muscle, and, I always use that as like the diversity of the team is what makes it happen, right? The A-team. So for you guys, maybe walk us through what happened there as you guys came together, what each of the roles were and why, the combined sum of your parts is greater than, the parts itself.
Sure. Yeah. And you're right. This is brand new. I mean, the whole idea of large scale real estate syndication didn't start till 2012 with the Tax Cut and Jobs Act, which laid the legal foundation for being able to do a lot of these types of syndications. So the industry is evolving. Teams are forming. Our team, so for instance, usually the way it works is that we have our two of our partners who are full-time talking to brokers, and they do nothing but talking to brokers and underwriting. Sometimes we have a third person do underwriting as well. So the flow usually goes that, hey, the broker, sends you a property. We underwrite a whole bunch of them. During our last acquisition, we underwrote 73 properties before we decided on a property to move forward with. And so we've got a very large spreadsheet that lets you go through the analysis. You get back to the broker and say, hey, I'm interested, I'm not. Here's the bid I can put in. And you submit your LOI, your letter of intent. And this is a non-binding agreement that allows you basically to say to the seller, hey, here we are. We're putting together a team. We're interested. We think we can, purchase it about this price. Let's start talking about the details. And then the other people that are in the team, so this would be where the people that talk to the brokers then would talk to me and say, hey, we need to know if you can be on the asset management team, if you'd like to come and do due diligence with us. We need to make sure that we do a financial audit. We need to do a physical audit. We need to make sure that we put our debt in place. We need to make sure that if we're using private equity. So for instance, this deal in Des Moines, Iowa, we're looking at a $6.8 million raise. We're going to be using private equity for some of that. And we need to come to terms with the private equity firm. That often is actually a big, it's a decent security point for limited partner investors. If a big firm is coming in and investing their money, then they've gone through all the due diligence themselves independently. So where I come in, since I have a full-time job, I work at Intel, I don't do any of the broker relationships. That is a full-time job, and other people in our team do that.
Yep.
I'm involved in capital raising. I'm always involved in going down and seeing the project in due diligence. And then some of the other parts of the team. So I mentioned the people that talk to brokers, people that are involved in due diligence and asset management. They're going to oversee the renovation of the project, the CapEx budget. The people that sign on the loan are very important. Usually lenders require you to have people in the team whose net worth equals at least the amount of the loan. So you have to put together either one person or a group of people that can sign on the loan. And then there's earnest money or at-risk money. So we don't yet own this property. Yeah. We're still in negotiations. However, we flew to Des Moines and paid a property inspector. We paid him. We paid him
costs.
Yeah, we paid them. The group was $500 plus $45 a door. So that comes out of the general partner's pockets, and there's no guarantee at this point. We have a strong agreement, but there's a possibility the deal's not going to close. If it doesn't close, we're just simply out of pocket on that money. Yeah. So each of these roles in the general partnership will usually have a certain amount of general partnership equity that's allocated to them. And we come together in kind of a standardized format where the roles are filled out and people fill them in. And we meet down at the property during due diligence to all meet face to face and discuss it.
Yeah, no, it makes a lot of sense. I mean, this is where, and that's, I think for us on our side, we've seen the same, is that it's that downstream, the processing, the investment, at least from Verivest's perspective, right, is that middle and back office administration and tax, right? Because you can already see the number of people that are involved. That's a lot of moving parts, right? And from our perspective, being, and it was born out of our own experience of being, active investors ourselves, of saying, clearly this is a need, right? And it's hard to build it as you're going, given, trying to do all these other things, right? So you plug in, someone like Verivest that can kind of handle that piece of it, but you've got all these other, parties that are involved. And so, but you can just see inside of what it takes, because the end final product, maybe to a potential LP. And as you mentioned, right, like you come in and some, a private equity is going to take, some amount of it or whatever, how you end up, coming up with all of that, the 6.8 million or whatever the equity requirement ends up being. You're going to syndicate some of that capital, and then that's the door that's opened up for, a passive investor who's looking to get involved, right, via syndication. But all of those things that have to take place in order for there to be offering material, and a door to come through and something to subscribe into and something to buy is a lot of work, right? Because what you hear, and it's easy to say, and it's not that our listeners have, probably gotten over this, but it's just sometimes I think there's a knock on it, right? Like, well, why the acquisition fee and why the whatever this fee? And, and like you said, like the pursuit costs are, they could be dead deal costs that are just eaten, and there's so much that goes into it that you don't end up seeing when something becomes available. And even too, just the notion of, I know we all want to believe that it'd be nice if it's just like every deal was crowdfunded and available and you could just sit in your house and just click invest. And, I know that there's certain firms that have made that a reality in some way, like there's a doorway into it, but just appreciating that it's still a relationship game. Right. And I just keep emphasizing this, that I know you might want to think you can sit back and do it like that if you're a passive investor and think that's how it works. But even from that seat, you're just another role, right? Albeit maybe a bit player, and but it solves your problem too. You're looking for cash flow, you're looking for some growth, you want some exposure to real estate, you don't like the volatility, like Daniel mentioned. That's what it takes. So appreciating what you're dealing with, and what's going on behind the scenes, and that you're going to have to build relationships, right? Because just because Daniel puts this whole thing together and then he offers it to you, it doesn't mean that he wants, just because you got the money doesn't mean he wants to take your money. Right. And I think that's where sometimes there's a bit of a disconnect. I have turned down
investors.
Yeah, of course you have, because you're thinking the same thing, like, and everyone is, right? And so it's just like, yeah, I know y'all want like $10,000 minimum investments. You can get into stuff, but it's just on the other side of the table it's another relationship to be managed. It's another thing. And, at the end of the day, people want to do business with people they enjoy doing business with. It goes both ways. The investors, yes, you've got to know, like, and trust the person in order to invest with them. But the other side it's pretty much has to have the same thing happen. And so, because what we've done, like we've created on Verivest, right, we've got the sponsor directory, and our intent was to help investors meet people like you, right, in a way that was, remove some of the friction. Meaning, we record you, we got an interview of Daniel talking about your, thing, and in podcasts like this too, right? Like you get to meet them, but that's just step one, right? Like the intention isn't that you'll just see a deal up there and just, hit invest and have $50,000 or $100,000 wired into someone's account. That's just not really how it should work. And I don't think it's more of a, okay, get to know you no matter what. Yeah, I want to help like shortcut the amount of time it takes to get to the point where you can consummate a transaction with people. But at the end of the day, it's still a relationship, and you're going to have to sort of have that and say, hey, do I like what you do? To how you think? Is it, is there good connection here? Then you can talk about, if this Des Moines deal, comes together or whatever. That's secondary. Mm-hmm. So how do you feel? Is that the same thing? You look at it that way, or?
Yeah, you put in a lot right there that I wanted to comment on. And I was like, I can remember this and that. I want to go back to your comment about asset management fees. And I'm a big believer in the idea. One of the main motivations for people going into real estate is that they want to control their own finances, right? You're responsible for the deal. And a lot of people go into single family homes because they have absolute control over it, right? They can put money into it. They can raise the rent. They can screen the tenants. It's all on executing on the business plan is all on the investor. Oh. And a lot of people are that type of investor. Now, the next point over is that, well, what if I want to do something slightly bigger than a single family home? What if I want to have economies of scale? What if I want to have better tax advantages than I have in single family homes? What if I want to have, vacancy that's not 0 or 100%, so that sometimes that's a fairly big risk. What if I want to have cash flow without having to, worry about tenants, termites, and toilets? So if you want to get to that next level of investing or investing in a larger asset, then it really takes specialized knowledge. You need to have somebody who has done it and who has a track record and who's taken a lot of time getting to know people, developing their own networks, talking with people on their team. And that is a large job. It is. And it's not for everybody. Not everybody wants to do that. And so where the asset management fee comes in is that asset management fee is a compensation for somebody doing a lot of work. Yep. We underwrote 73 deals before we closed on one of our previous deals down in Fort Smith. And that's a lot of work. And it was at least two people's full-time jobs. And so as a limited investor, you don't want to invest in a deal where there's no asset management fee, because it means that somebody's doing a lot of work and they're not getting compensated. How long do you think that person is going to be interested in continuing to work for free?
None at all.
Yeah. So, you do want to balance, control over your own financial destiny, which you can have absolutely with, a single family home and executing on a well laid out business plan. But going into a larger asset, there's a lot of specialized work. And as people specialize, you want to make sure that they're part of the deal and compensated fairly.
I agree. My axiom is I do a lot of fund advisory work, helping, structure like pooled investment vehicles and helping people kind of make that leap. And, we always say is that put the money where the work is. Yeah. Right? And so it's, you put the money where the work is. And because when you do that and you go into structuring something with that in mind, right, then it means that you're saying, where is the effort? How do we compensate the effort? And is it fair? So that when someone does push back against it and say, 2% asset management fee, that's just highway robbery, right? You can defend it. Well, we put the money where the work is. And here's why. It's 2% on this deal because of X, Y, and Z. It's a lot more laborious. Well, what did the last deal? It was only 1%. Yeah, because it was like light value add. We're putting very little in, whatever. There's a reason and rationale for it. And, those are the things that as more people do, because if you're going to compare it to, and this is the challenge, right, is that, 2 and 20 and, private equity or, this in hedge funds or this in a mutual fund or what's the expense ratio? And it's like, that's not apples to apples, right? Like you're not comparing that. Those aren't like things. They're different things, right? So and that's part of becoming a good investor is understanding how these various investments work and operate under the hood so that you can differentiate that, because it's not to say that there aren't people out there that have terms that are unreasonable, right? That are out there and saying, I'm going to pay you just a flat 8 and that's it, no upside, or I don't know, whatever crazy stuff they come up with. it's not to say that people won't try that, but for you as an investor to educate yourself and understand how the process would work and what you're looking at and understanding the differences between them, so you can have an intelligent conversation with the deal sponsor, right, about, what these things are. I think that just makes it a better, it's a more functional sort of buying process, if we could put it, as a buying process.
Yeah, I definitely see a natural tension between, having absolute control of a deal, and then on the other end, having specialized knowledge and offering it to other people. But then your big challenge is how do you educate your investor? How do you make them sophisticated enough so that they can really, know what you're doing when you're being transparent? So how do you educate your investor? How do you be transparent? How do you do that in the best way? That's a big challenge for GP teams.
It is. And that's what I think that it's the growing pains of any, burgeoning sort of industry as real estate investing in this way, passive investing in particular, sort of, access into this is the education piece is so valuable. And to me, that's why we see, obviously you've got, COVID and this global pandemic, so it's harder to meet with people, but it was always hard to meet with people, right? That was always a challenge. The conferences were a bit of a mirage, in terms of a good way to like meet investors or meet other people. They weren't that effective. So I think with this, just like we got this podcast here, that's why you're seeing the proliferation of podcasts. It's a way for people to educate. And that's why I say, like, for me, I'm all for it. Like, this isn't a zero sum game. Like, well, I've got a podcast. Well, it's like, there's millions of people, right? Like I said, everyone likes different people and they like to hear different sort of ways of approaching things. It's good. We want more people to have podcasts, because then there's resonance that starts to be created when people start to hear the same sorts of things, and maturation takes hold. And we move from a, by and large, extremely ignorant sort of audience, those who don't know enough about what it is, but know that they want the benefits of it, to a more educated or enlightened group of people, right? And now, and that's good for everyone. And it just so happens that in this space, there just hasn't been a lot of that. There's been certain types. Obviously, there have been gurus around for years, and they talk about certain things, mainly single family, real estate investing or whatever. But, that's what's happening. And we have now a nation and maybe a world of people that are far more interested in taking control of their own financial destiny. That's the other trend, right? Is like, maybe it's not the greatest idea to just, stick my money into mutual funds and, whatever, have my financial advisor, the 401k do it. Maybe, and it's amazing how long it took us for, a society on a whole to figure that out. We moved from a pension, kind of a pension world to, to this sort of, you're in charge of it. I think that a lot of people didn't get the memo, and they sort of were just like asleep at the switch. And, there's nothing. Now they realize that you can, with Robinhood and all, it's just crazy in the last couple of years.
Yeah. That's something, every day at the REI club at my work, where people are coming in saying, wow, I didn't realize there's so much about real estate. I didn't realize that it had tax advantages. I didn't realize, that I can invest my money this way. And, it is less liquid. And so therefore you have more stable ability to create forward-looking projections.
Yeah.
So, we talk with people like that all the time. And well, one thing I tell people, if you're putting money into an IRA and you're looking to retire on it, the whole idea is that you're going to be in a lower tax bracket once you retire. And so that's another way of saying you're retiring with a small income.
Yes.
So investing in real estate and investing for your own future is your way of avoiding that.
Yeah, that's right. And a lot, people by and large just need more exposure, than they probably have. And that's a good thing, that we're moving that direction. So where can people find you? So where I know we've sort of hit it. Is it the best place to kind of go to this rei4professionals.com?
Yeah, we're currently transitioning our brand over to this. We're going to have shows on, YouTube and all the podcasting avenues soon, but you can go here and sign up for our little notify us when we go live form that we have on the website. Otherwise you can email me at, I'll just give it out, Daniel at REI, the number 4 Pro.
REI4Pro. There you go.
REI4Pro.com.
.com. That's right. .com. Very good. Well, thanks so much, Dan. It's been a pleasure to connect with you today. And since we're in the same city, we might actually go and meet in person, which is a crazy thing to think of. So anyway, take care.
All right. Thank you. Bye.
All right. Bye.